The most successful crypto investors aren't the ones working hardest. They know something you don't, a secret strategy that turns market crashes into the biggest opportunities. What if I told you there's a hidden pattern that predicts explosive crypto gains? Now, if you bought Bitcoin 10 years ago, you probably sold too early, missing the biggest gains. Very few people actually held through multiple cycles, but you can still make it. The best time to accumulate is during bear markets, and while we're currently in a bull market, there's a magical phenomenon called altcoin season. This happens during what macro expert Raoul Pal calls the banana zone, and understanding this is the key to making money in crypto. But first, let's talk about why this matters so much. Why are the rich getting richer while you fall behind? It's simple. Scarce assets keep going up in price. Real estate, gold, art, all of these things are becoming increasingly unaffordable for average people. As always, this is purely educational content based on historical data and analysis from some of the smartest macro minds on the planet. Nothing here is financial advice. So let's begin. Now think about it. If you're putting money in a conventional 401k or the S&P 500, you're barely breaking even. You can't keep up. You're buying less of these assets every year, and those retirement accounts aren't making you wealthy. This is why so many young people have turned to crypto. It's not just speculation. It's perhaps your only escape from a system designed to make you poorer. You can't afford houses or the other things older generations could buy, so you're forced into higher risk assets with much higher returns. It's your only way out of the trap. And of course, people learned this the hard way. During the 2017 bull run, countless investors thought they were clever, selling Bitcoin at $2,000. I'll sell and buy back lower, they told themselves. By the end of the year, it hit $20,000. They watched in agony as the greatest wealth transfer in history happened without them. These costly mistakes taught a powerful lesson. Strategic patience isn't about doing nothing. It's about directing your capital toward what truly matters. The ambitious but patient investor doesn't avoid markets. They avoid unnecessary transactions. They understand that capital, not effort, is their most precious resource. Consider two crypto investors with the same goal. Person A trades constantly, chasing every pump, buying every dip. Person B focuses only on high-impact cycles, automating or eliminating the rest. 6 months later, Person B has built a sustainable system, while Person A is burning out despite working twice as hard. It's not about effort, it's about leverage. This is exactly like video gaming. In games like Fortnite or Minecraft, beginners frantically collect everything and jump between tasks without a plan. Meanwhile, pro gamers execute fewer, more focused actions that actually win games. They don't waste time decorating their base when the storm is closing in. They don't rage quit after losses. They adjust their strategy and keep playing the long game. It's the same in crypto. Beginners obsessively check 20 different altcoins, panic sell during corrections, and chase every trending token being shilled on crypto Twitter. The crypto pro understands that markets have underlying mechanics, like a well-designed game. They know liquidity is the ultimate power-up and prepare for boss battles, market corrections, in advance by building resilient positions. But what exactly is this liquidity everyone talks about, and how can you use it to your advantage? That's where understanding the banana zone becomes crucial. The banana zone, a term coined by macro investor Raoul Pal, refers to those explosive periods when crypto markets deliver extraordinary returns. It's driven by something most investors ignore: global liquidity cycles. When central banks and financial institutions inject liquidity, or in simple words, inject cash into the markets, assets rise, with Bitcoin and crypto rising the fastest and highest. The banana zone gets its name from the curved upward pattern it creates on the charts. It comes in phases: breakout, correction, alt season, correction, and final push, repeating with remarkable consistency. Let's look at an example from a previous Bitcoin cycle. In 2017, after a series of steep 30 to 40% corrections that shook out paper hands or panic sellers, Bitcoin still went up around 20 times from the correction. Each time traders panicked, the market convinced the bull market was over. It wasn't. Today, we're seeing the same pattern play out. Now we won't say you will get the same returns out of Bitcoin this cycle, maybe 150,000 or 200,000, who knows. But there are still some gains to be made. And so what happens when Bitcoin begins to stabilize and capital starts hunting for higher returns? While Bitcoin leads the market, the real explosion happens in altcoins. This is where life-changing returns occur, but only if you understand the timing. Altcoin season is the phase of the banana zone when Bitcoin's dominance drops and capital flows into smaller projects. It doesn't happen randomly. It's a direct result of the business cycle picking up. What drives this? As household and business earnings improve, you have disposable income again. you move further out the risk curve. Altcoins are exactly the same as small caps, emerging markets, penny stocks. They're all the same thing. The further out the risk curve, the more the business cycle drives returns. Consider having a portion of these altcoins in your portfolio. This is why understanding the banana zone gives you an edge. While most investors obsess over short-term price action, you'll be positioning for the predictable, liquidity-driven phase that's coming. Now that you understand the patterns, you might be wondering, how do I actually implement this knowledge? What prevents most investors from capturing these gains isn't lack of information, it's their own psychology and habits. Your trading setup and environment will always beat your emotions and willpower. Stop trying to be emotional and start designing a world where the right choices are the easy choices. Want to avoid panic selling during regular 30 to 40% corrections? Set limit orders in advance and delete trading apps from your phone. Need to dollar cost average more? Automate your purchases through recurring buys. Each friction adjustment makes good choices for the path of least resistance. Remember, these steps would make you one step closer to not taking a job at McDonald's. When you set up the right systems, you won't fight yourself during market swings. You'll see these drops as normal market behavior, not reasons to panic and sell. Many investors spend hours crafting the perfect entry point, only to realize that broader liquidity cycles were determining their returns. But even with all these systems in place, you'll face moments of doubt. The real challenge isn't just building the right strategy, it's staying resilient through the entire journey. And that journey is unlike anything you've experienced before. The crypto landscape reveals itself like a map to hidden treasure for those who understand its patterns. Within this map, the banana zone stands as both the journey and the destination. Stay in the game when others flee in panic. The market has the ability to test resolve through corrections. These 30 to 40% drops aren't anomalies. They're features of the system, designed to shake out those who don't understand the bigger picture. During these moments, when TikTok influencers and crypto Twitter overflow with despair and often go silent, the most valuable action is often stillness. The journey through crypto's volatility demands more than just diamond hands. It requires an understanding of how these markets truly function. Exchanges grow rich from liquidating leveraged positions during these predictable corrections. They feed on impatience and fear. So next time, do think twice when you're leveraging 100x on your favorite altcoin. And so the most important question, how can you stay in the game? First, safety. Throughout this journey, security cannot be an afterthought. Exchanges are temporary waypoints, not final destinations for your assets. The crypto graveyard is filled with the ambitions of those who never took self-custody seriously until it was too late. Your keys, your crypto, this isn't just a catchy phrase, but the fundamental principle that preserves your position in the game. As always, do not make the mistake of writing your seed phrase online or storing it on your cloud. You never know who could be monitoring you and strip you off from your unrealized shiny gains. The pull of scams and hype grows strongest precisely when legitimate projects are delivering their greatest returns. The FOMO that drives people to chase obscure tokens during peak cycles is the same emotion that left countless investors selling Bitcoin at $2,000 before it's climbed to $20,000. The market rewards patience and punishes impulse with remarkable consistency. And so, when you're frantically taking screenshots of your profit and loss to share with friends, when you can't stop refreshing your portfolio because the gains are so incredible, that's precisely when you should be taking some profits. The moment your gains become screenshot-worthy is often the market's way of offering you an exit opportunity. Don't forget to actually take some profits along the way. The goal isn't just to watch numbers go up on a screen, it's to improve your actual life. The best traders don't just know when to enter, they know when to exit, at least partially. As your purchasing power reduces yearly and conventional investments barely keep pace with inflation, as younger generations find themselves priced out of real estate and traditional assets, crypto remains perhaps the only asset class capable of fundamentally changing financial trajectories. The lessons from previous cycles whisper the same truth. Don't outsmart yourself. Follow the liquidity, build robust systems, and let the banana zone work its magic. The journey has already begun. Write in the comments which of these principles you're going to implement first, or share your own ambitious but patient hack that has saved you time and energy.